Sir, I am pleased to inform this House of the developments. Certain specified categories of government securities would be open fully for non-resident investors, apart from being available to domestic investors also. The limit for FPI in corporate bonds, currently at 9% of outstanding stocks, will be increased to 15% of the outstanding stock of corporate bonds. To improve investors' confidence and to expand the scope of credit default swaps, we propose to formulate a legislation to be placed soon before this House for laying down a mechanism for netting of financial contracts. The debt-based exchange-traded fund, the ETF, recently floated by the government was a big success. Government proposes to expand this by floating a new debt ETF consisting primarily of government securities. This will give retail investors access to government securities as much as giving an attractive investment for pension funds and long-term investors. So to address the liquidity constraints of the NBFCs and the HFCs, this was very much talked about between July and December last year, 2019. Liquidity constraints was very frequently mentioned to us. So to address liquidity constraints of the NBFCs and the housing finance corporations, post the Union Budget 2019-20, the government formulated a partial credit guarantee scheme for the NBFCs. To further the support of providing liquidity, a mechanism would be devised. Government will offer support by guaranteeing securities that are so floated. Infrastructure financing. Government's commitment for investment in infrastructure was reiterated when 103 lakh crore national infrastructure pipeline projects were announced. I would also like to inform that about 22,000 crores of rupees has already been provided as support for infrastructure pipeline. On December 31st, if honourable members would recall, a national pipeline consisting of more than 6,500 projects were announced.